Okay, so I'm going to go over what my process is, and then I'm going to show you it on real time from an empty chart. But first, I do want to go over the process. So, right here, I have two examples of two different type of market structures. So I have a bullish market structure, which is an uptrend, and then I have a bearish market structure, which is a downtrend. This process, this strategy, which is supply and demand or ICC, whichever terminology you prefer, can only be used in a trending market. So there's three type of markets. There's bullish, there's bearish, and then there's consolidating, which is when price is literally not making any higher highs or any lower lows. It's literally just trading sideways. This strategy can only be used in a trending market, so trending up or trending down. So in a bullish market, we have a low, then we have a high, then we have a higher low because this low is higher than this previous low. Then we have a higher high because this high is higher than this previous high. And then it's continuing. So a higher low, a higher high, higher low, higher high. That is a bullish market. A bearish market is we have a high, then we have a low, then we have a lower high because this high is lower than this previous high. Then we have a lower low because this low is lower than this previous low, then lower high, then lower low, and it continues going down. So price is never just going to go straight up and it's never going to go straight down. It's always going to have these pullbacks to continue higher. So I'm already saying kind of the process. You can kind of see how the process works based off just me saying it's going up, it pulls back, continues higher. That's exactly what this process is, and that's exactly what we will be looking for. So, for example, let's start off with supply and demand. I'm going to use supply and demand over here, and I'm going to use the ICC over here just so you can see the strategies used on two different type of markets. So, for supply and demand, we first want to find the trend. So we come into the market, we see, okay, price is moving up. That is telling me we have a potential to buy, right? Now that we have a high, we want to identify it. This was our most recent high. We want to identify it. I'm going to keep it white. So when I identify it, now we have to wait for our break of structure. What that means is we need price to show us that it wants to continue going higher. In order for us to know that buyers are still in control, we need price to break this previous high. So price came, created a high, pulled back, and finally it broke this structure. It finally broke this structure. That lets us know, okay, cool, price is still pushing up. Now that price broke the structure right here, which I didn't necessarily put, but let me put it just so it can make sense. Once we have the break of structure, we are looking for something called a supply zone and a demand zone. And I'm going to explain what that is. All right, so now that we have the break of structure because price pushed past this high and created a higher high, which is what we want to see, now we would create our zone. So this would be our zone. If price comes back to this area, that will let us know we can enter the trade. So we need price to come back, tap the zone so we can get in and get in this trade. So price broke structure, came back, it tapped the zone. Once it tapped the zone, we are now entering the trade for a move higher. It's literally that simple. Like, there's no way I can even make it sound more complicated. Find the trend. We found it. Wait for a break of structure. Broke the structure. Identify our zone. So this is our zone where price broke structure. This is our zone. Wait for price to come back and tap the zone. Price tap the zone. Enter the trade. And that's it. So that's how that would look on a bullish uptrending market. Now, I'm going to do the same thing because, like I said, it's literally the same exact process, just called different things. So first thing is, we know this is a bearish trend, right? So if we want to catch sales, we need price to show us it wants to keep selling. So we were waiting for what is called an indication. Something needs to indicate that price wants to push lower. So we wait, we identify our low. So this is our most recent low. Price indicated that it wants to push lower because it's AKA it broke structure. It broke structure to the downside. So that's an indication that price wants to push lower. Now we have to wait for price to correct. The correction is basically price coming back to that area where it broke structure, which is tapping of the zone. So price pulled back, tapped this zone, and then it continued lower. That is literally the same exact thing. Price moved lower, indicated it wanted to go lower because it broke this structure, came back, corrected itself, and continued lower. It's that simple. There's no other way to put it. It's literally that simple. All right, now I'm going to show you this on an actual chart.